Hello, everybody. How are you doing? Welcome to another webinar. I'll be doing maybe two next week. We got our first presentation, possibly on quantum computing, courtesy of HSBC, quantum-enabled algorithmic trading tests from with IBM. It's in the chat if you want to get that article. It's from HSBC themselves. So I may do a topic on that next week. All right. So this is, as I said earlier, this is where I go deep with HFT modeling, strategy development, and the whole 9 yards. And this is why I'm going to show you why I think, well, don't need to think. It's kind of proven to me that the AI reveals a lot now as it gets more advanced, more competition, blah, blah, blah. So we're starting to see some interesting things come out of the world of AI and how these high frequency trading shops use quant modeling for um, things like Bitcoin. Okay, so enough jib jab. Let's get this started. So what we're going to talk about is specifically for Bitcoin. As I said, this can be used universally, right across the board, across all the major future markets in the CME, Chicago Mercantile Exchange. Probably the same with ICE and Eurex. Just so you know, I have now. I'm just testing out different futures brokers. Looks like I may go with AMP Futures. You just pay for the data cost. If you go with their Quant Tower solution, you get a free platform. And all you're really paying for is commissions with AMP. And you're also only paying the very low commission rate, 10 cents per contract. So just so you know, I'm testing that uh, as we over the last few days or last few hours, I should say. So we're going to look at the core mechanics and how things are executed in the world of high frequency trading. Again, with Bitcoin in mind, there's a bunch of data infrastructure that's used that we, the retail, don't have access to. They also generate very advanced trading signals, and they have their own set of institutional level execution risk framework. And there's just different challenges that the retail world first don't know about it, and what can we do about it, and how do we adapt. Okay, so let's take a look at how it works in the world of institution. So basically, as I said earlier, there's about usually a combination overlaid, maybe 3 to 4 different algorithms used combined to deliver a so-called strategy when it comes to high frequency trading. This can be said for across probably all the major uh, instruments in futures and options, and also each one is going to have their own unique set of mechanics and characteristics and how they um, behave in the world of trading. So the first thing they do is they have to find where can they find their price discrepancies. Okay, so what we're talking about here is on the bid ask spread, and they're looking for different ways to gain in the market. So specifically in Bitcoin's different because you have the spot market, and then you also have the exchanges themselves, the Chicago CME, let's say. I haven't really can't say what the volume is with Bitcoin yet, but obviously a lot of the volume's coming through ETFs. So what a lot of these firms do, they'll span out their trading between uh, s- um, an exchange like the CME, trade on, open up maybe let's say a futures contract or a short one, or get a put, I should say. And what they'll do is they'll buy up another contract or another contract on Deribit. They will also do the same thing on Binance. So they could be doing as sophisticated as this uh, try arbitrage type of strategy, just as an example. So they can be spanned out not just in one exchange, but among even two different retail level exchanges in the world of crypto. As I said, Binance is going to be one of the big ones, and Deribit's where they're pretty strong in the options and futures. And what they'll do is they simultaneously execute all their trades. Okay. So what they're doing here is they're looking for risk-free profit, how to do that. And if you're not familiar with the basis, it's basically taking advantage of a basis deviation between the future price and the spot market price. And then through that, there's going to be different market, that those different individual markets will deviate from the futures and or from the spot as well. So there's a lot of arbitrage opportunity for them. But again, they're doing this on a very split nanosecond basis. Okay, so it's spanned out across the different exchanges. All right, my computer froze again. Hang on here. Okay, yeah, somebody's telling me I need a new computer. Ha ha ha. Ha. Okay, so uh, actually, I can get away with that. Sorry. Okay, next one. Um, Now we're dealing with one very popular technique that the AI keeps revealing is volatility surface analysis. So what they're looking at is there, if you've ever seen the 3D charting with the option pricing with a different set of things put on the three different axes, including the price. There could be spread, there could be volatility, or should I say implied volatility, and so on. And the surface will reveal a lot of things where there's different mispricing, and it's done in almost real time. Um, I have uh, demoed on YouTube Lightning chart. They have a very specific chart for that for volume, surface volume and volatility in Lightning chart. Just so you know, they also use dynamic risk hedging as well. I don't like I said, I can only go so deep. I'd be here for like 3 hours trying to explain all this. And obviously, what they're trying to do is to optimize the returns on all these different opportunities, and usually it's driven by a combination of volatility, arbitrage, and hedging techniques. I've got a whole full detailed course on that if anyone's ever interested in that. And then from there, what happens is this is what I talked about earlier. These are the models that most HFT shops will use. They'll use a, a set of different models for different goals. So they'll, in this case, they'll use this is a sample. Okay, they'll have one model that will use complicated data analytics to extract potential insights from a different set of financial data sets. And as I said earlier, they're going to be comparing that risk against TLT Treasury. They could be comparing that risk against S&P 500. They can be comparing that risk against the DXY. So they're trying to measure why would they want to take this trade in Bitcoin against all these other metrics out there. They're also going to use a lot of sophisticated machine learning algos. What they're trying to do is they're just trying to forecast short-term order flow and market behavior. So this is on the fly in real time where everything's all overlaid together. The other thing that they're doing is they're also enabling the traders, or the call them auto traders, to position ahead of those forecasted market movements using the predictive insights for better timing. So what they're doing is they're forecasting where will the market go. They'll forecast the pricing on where that pricing will be, and they'll forecast that. And this is all done, as I said, at a very like split level nanosecond speed. It's just absolutely it's done within, like, let's say if you put a trade on, and I'll always use the Robinhood. If you put a trade on Robinhood, an open positions put up, by the time you open and close your eyes, they've already done a trade to go against you. And this is kind of what they're doing here, but they have open field places like Deribit and Binance because they're not regulated. So what they need here is they need ultra low latency infrastructure. I'm sure you already know about FPGA. Um, they also, if they're doing market making, they'll provide provisioning of liquidity in the market, and they have to maintain market stability. Because if there's a shock in the system, like that fat finger years ago, where all of a sudden there's these market losses, it's a huge negative impact. And I think this is one of the big reasons why there's these crazy price moves in Bitcoin because of that. It's hard to stabilize the price of Bitcoin because there's so many participants coming in from, if it's an ETF, it's coming in from retail, or if it's coming in from one of these shops. And the other thing is what they do is they'll, I don't know, the term is harvest out opportunity, capturing profits on the bid and ask spread. And then they'll be able to trade that in a, like, in the probably thousands, maybe even the millions with these ultra fast systems. Okay. And obviously, the big thing that they have to watch for is the risk management and making sure everything's balancing properly. Because, like, especially with Bitcoin, it's highly um, quick. So these are the core strategy mechanics and execution. Okay. So these are different types of strategies they could use, and there's different times to do it because I've talked about market regime changes, and they're fast. They're like again nanosecond fast. So here there's one called a cash and carry arbitrage. So again, what they're doing is they're going to do something as an example, buy a spot asset, Bitcoin, sell the future to a profit between the difference between those prices, and there's going to be also a carrying cost. Also, there's going to be what they call reversing arbitrage. This one I couldn't quite understand, but they'll sell the spot asset and simultaneously buy a future and exploit this risk reverse pricing difference and minimize their risks. Sort of like kind of like hedging in a way. And then the other thing is they have to obviously factor in cost and timing consideration because on their accounting side, um, they have to do it in a way where it's always profitable. Okay. So this is where it gets really crazy. I'm going to make sure everyone can see this. So there's three different types of models that you can do. Heston, SABR, uh, and local volatility models. So as I said, they're capturing the market volatility. And when you're dealing with options, you're really dealing with implied volatility. And I've kind of shown in various videos and some of my projects in my memberships where you can take advantage of those different volatility moments. And this is where on the back testing, they're going to be back testing for bull market conditions and all the way on the other extreme of shock pricing, where something in the market gets shocked and the pricing, let's say, crashes 20% in a matter of 10 minutes, or like a flash crash, let's say. There's also derivative pricing. Um, this is really crucial because they have to be sure that they're accurate, especially in the world of derivatives, which obviously is options and futures. It has to be dynamic, and a lot of time it changes so fast. There's a lot of uncertainty involved. And one of the ways they protect themselves is with the hedging these strategies. So, they're going to have, let's say, volatility models to develop effective hedging strategies against these different market risks. Hope people are still around. Looks like they are. All right. So, moving on to the next one. Okay. So, we also have optimal quoting, inventory management in the world of high frequency trading. Dynamic algorithms can be used. Specifically, the big term they use is self adapting. So, you can have a general algorithm, and then you have your parameters that change, and that's where the dynamic piece comes into it. And what they're doing is they're adjusting the bid and ask quotes for market efficiency, so they could be market making, and that's just from the one participant, because they're always in competition with each other and retail and all the other providers out there as well. So they always have to have these complicated algorithms and models to protect themselves, but at the same time be able to um, test the water of the market conditions. And again, this is just in Bitcoin, but again, these techniques can be applied to a lot of the major markets out there in the world of futures and options or derivatives. So, yeah. So what they're got to do is they got to balance all these different holdings and minimize the exposure while maximizing their profit. Alrighty. Okay, so now we have to talk about the edges that these firms will have. And there's a lot of innovation applied to each firm. And maybe traders have their own edge as well. Okay, so these are the things that these firms need to be concerned with when they're involved in let's say market making and whatnot. First thing they got to watch out for is hidden liquidity non-displayed orders that institutions aim to detect to better market insight. So that's another way of saying we want to trade, we want to have these block trades put through, but we don't want the competition to know what we're doing. So they'll put them through dark pools or they'll break them up into iceberg order with this identification, advanced algorithms to reveal true orders and improve the price discovery. But there's some predatory action that a lot of these firms take, which I'll try to explain. Also, what they're trying to do is they're trying to detect any potential hidden liquidity. Again, one way is via dark pools. Another way is through these alternative data sets that these firms have access to that we, the retail, don't have access to, or will never have access to. One of the big ones is if a lot of these firms may watch on-chain and using on-chain analysis on the blockchain of Bitcoin. That's publicly available, but you have to get that through a provider like a Glassnode. There's a couple of other data sets that are available on Deribit. Some are in the thousands per month. That's why it's inaccessible for retail traders. There's a couple of specific ones on CME as well, which are proprietary. Only the bigger firms will have access to it, and those can run up to 10,000 a month. And when I say even the smaller participants that operate on the CME may not get access to these data sets because or data feeds, I should say, because it's a pay to play thing on the CME. So the bigger your account on the CME, you're going to get access to better data feeds that smaller folks will have, and that's just the way it is on a lot of these big exchanges. CME is the big one. All right, so some of the other things they can do is using these machine learning and something I never knew about called game theory. So obviously they're going to. We all know about the machine learning and the optimization and whatnot, using analyzing the market to enhance their trade selection for accuracy and efficiency, as I said earlier. This one is different. They'll use a gaming theory, so they're trying to predict the market, the counter. Wow, this PDF thing. No, sorry. So they're trying to predict the counterparty behavior, and that helps them aid in their strategic decisions. Now, this is not like some humans doing this, as I said. This is algorithms, all 100% automated. It's just in the coding. It's built into that coding to make it a lot more sophisticated. And the other thing they have to work on is dynamically optimize market responses with between the game theory and these dynamic market conditions. Now, you can imagine I'm going very high level here, um, but when you get into the minutia of it, it's to get these firms in the billions of dollars. It's the millions of dollars of investment in terms of the research, the coding, the hardware, the data sets that sit on the exchanges. So if done right, they can turn these into multi-billion dollar operations. That's why they're able to pay a lot of their staff in the millions. So another thing they do is they do this thing called cross asset correlation and regulatory over the counter routing. So what they're doing is there's a correlation analysis. So in the world of Bitcoin, what they're doing is as I said, they'll be analyzing what's going on in the world of Deribit. They'll be looking at what's going on in maybe Coinbase or Binance in the bigger crypto exchanges. The retail market doesn't have a lot of impact like the institutions will, because the institutions are the ones doing the big block trades. So that would also include the likes of BlackRock and any of the other larger ETF providers out there. Because it's basically BlackRock, because they're involved with IBIT, the ETF, they can move the market. They have to do it in a way it doesn't negatively impact the market of Bitcoin, especially that will negatively impact the retail crowd. Another thing they do is they do the smart grade routing and they optimize on that. So what they're doing here is they have all these different over-the-counter venues. As I said, some of them will be through dark pools on the CME. Some of them will be done on public. exchanges that we have access to, like as I said, Deribit or Binance, and they got to minimize those transaction costs as well and manage that risk really effectively. Any questions so far? I think I'm about halfway. I hope I'm not like I said. Like this is how sophisticated it is, and over time, as I build it, like reveal stuff like this, you'll see how manipulated this is and can be. Okay, I'm not going to sit here and say this firm does that, this firm does this. 'Cause as I said, who needs a potential lawsuits out of it? But I'll just say the big players are kind of doing stuff they shouldn't be doing. Another thing I haven't mentioned in this presentation out there, there is something called the Bitcoin Mining Council, which included all of the large publicly listed Bitcoin miners. Hut 8, as an example, Marathon is another one. And they got together and had a council. So that was another thing that they did where the whole thing was rigged. So it was like a, uh, a oligopoly, we'll call it, or a cartel, where they can control uh, price of Bitcoin because they're mining for Bitcoin, and they have enough Bitcoin where they'll release that Bitcoin back to the exchanges. Lo and behold, when you get BlackRock, when they did all of their ESD stuff, like the questionable, we'll buy this little company, 6% here, 5% in this little company, and they had an indirect control over these companies because they were trying to push their green agenda on these companies. Well, BlackRock, before they brought out their ETF, which obviously is a huge, huge ETF, big player in the world of crypto or Bitcoin. They oddly enough were part of that mining council on the Bitcoin mining council. So today I want to see if it existed, and voila, it doesn't exist anymore. Might be under a different name, might not be actually. We, the public, may not know about it, but there is something out there where they do get together and they kind of do these sort of things. And BlackRock, I was part of that. And that was when just before they came out with the ETF. And the other thing with BlackRock, they're just starting to get into uh, bringing out a big Ethereum ETF. So don't think Ethereum's going to be or Ether is going to be safe from this. Apparently, they were also buying up a lot of XRP as well last week. So they may come out with an XRP ETF, or who knows what they're doing with XRP. I don't know, but that's the way it goes. Any questions on that sort of stuff? Because that's not part of the presentation. So, what we're going to talk about here is the data infrastructure and the key trading signals that these firms are involved with. So, as I said earlier, they have the data aggregation across the different venues, across the two big exchanges. A lot of these firms will participate in uh, Binance, uh, Deribit, and CME itself. As I said, they use this volatility surface analysis and they try to enhance their market insights as well. There's by using these expensive data sets that are available on the exchanges I listed, specifically a CME as well. Um, okay, so the big one that we, the retail, can have somewhat access to is the on-chain analysis. So there's another way of saying this is called whale hunting. Okay, so you can go through a bunch of news and they'll say, "Oh, a whale just moved $100 million onto Kraken or onto Coinbase or something, and it's a whale trade. They're setting up for something." So when you're looking for this, you're whale hunting, basically hunting to see what the big whales are doing in the world of crypto, specifically on the big ones like Bitcoin. So what they're doing is they're examining blockchain. They're uncovering all kinds of stuff that most likely the institutions are involved with. They're trying to analyze that flow trend as well. So, for instance, um, no, I was just going to come up with something I just forgot about. Anyways, another thing that they look for is the institutional flow trade, and then they're able to help time the trades as well. Remember, all the firms are doing the same thing with each other as well. Or I'm not saying it's going to happen or is happening, but they may be colluding as well on this so-called Bitcoin mining council. I don't know. I can't prove it. Anybody got any other questions on that? Okay, so here now we're going to deal with what triggers these trades. Um, so we have things like basis divergence, implied volatility shifts, and block trades. So remember, these firms only participate in derivatives. Like they'll get into some straight up vanilla futures trading. They may participate in some ETF or, well, stock as well, I guess you could say. But most of their trading is going to be done in the options market. Okay. So they're going to be using a lot of the options techniques available. So in this case, they could be doing what we call a future by a basis divergence and watching those signals. Basically, the basis is the difference between the future and the cash price coming down to the basics. And they're watching to see how it affects different trading strategies and their risk management. The other big thing in this world is, as I said, implied volatility. This is the forecasted volatility, and there's so many different ways you can measure that. You have what they're looking for is the shifting market conditions, and these will obviously influence open position pricing. And then the other big one I haven't talked about lately, but is big, are the big block trades. So these are the ones in the millions where the firms have to break them down into different iceberg positions. As I said, any questions so far in the chat? I don't see anything. Okay, so how do these firms execute these trades and what are the risk management frameworks that are involved? As I said, there's iceberg. There's these two different ones that are one's called a time uh, weighted average. Get what the P stands for, pricing, and volume weighted average pricing as well. So these are different types of strategies you can use across average pricing, I guess. That helps reduce the market. They also do these different types of iceberg strategies to break down the orders to have less impact on the market. Um, and the other thing is they use smart routing as well. So they may go through dark pools, they may do it publicly, they may trade via through an exchange like Deribit or Binance. So here's some of the famous risk management metrics that they use. So the first one is if you go into industry, look at the jobs, you'll see value at risk. So they'll do a lot of value at risk. That helps quantify potential losses and normal market conditions. Part of the thing from a portfolio manager standpoint is the three things they worry about is the drawdown percentage, potential, and historical. They're also worried about overall, obviously, is the price going up, price going down? And they're also looking at a variety of other things. But the two big ones is they'll do a calculation on their Sharpe ratio historically. They'll measure the maximum drawdown potential as well. And the other big thing that they do, and the nice thing when it comes to options trading, they'll do a Greek analysis as well, because you can go very deep on the Greek analysis as well. So some extreme conditions here. What can happen, as you probably know, with Bitcoin, it can move up quite a bit, real fast. So some will do this tail hedge, tail risk, meaning if you look at a normalized distribution of different prices over a distribution curve, you'll have tail risk both on the left on your extreme negative and on your right for your extreme profit. So they're trying to mitigate obviously the losses and the rare chance that Bitcoin that price will drop, and it happens quite a bit. And the other thing is they have to have some kind of protocol available in case the markets just drop 20% in 20 minutes. So they're going to probably have something to prevent that, be able to respond to it quite quickly. I don't know if you know about the Fed, the Federal Reserve. They have something called the plunge team. They have a specific trading desk on standby if the markets start to drop excessively, like 10% drop or a 5% drop or even a 20% drop in the same day, they'll activate that plunge team to prevent that from getting worse. So they'll buy up a lot of the equities in the markets to prevent that from happening. So basically, it's another way of saying the Fed will do direct investment into the big stocks. That's happened in the past in the last great financial crisis. And I think they did that during the pandemic as well. All right, so here's the problem for us, the retail mom and pop type of trader. So obviously we're at disadvantage. One of the big things that we don't have is information delay. Um, the other thing we have to deal with is slower execution speeds, and we have limited capital. Those are usually going to be the big factors that are going to be against us. Um, so one thing you're better off to have the best execution is to be on the exchanges themselves, like to be actually direct market access and be part of the ecosystem of the internal network that the CME has, which again costs a lot of money per month. So there's some tools that can be used here. Um, Obviously, you can from high level analyze trends. Obviously, the standard make informed trading decisions. That's as a human, but if they're trading via as a human or buy and hold or what they do with the dollar cost averaging. Sorry to say, but there's too many disadvantages with that. Um, and then there's all the different order types that you have. So you have your limit order, you have a market order. Thing is, I didn't know this until about a week ago. If you're putting out market trades like I used to do, that's going to be the classic signal back to these HFT shops that they know, oh, we got a market trade. Let's trade against it. So if you're on one of the big firms I've already mentioned in the stock market, and you do a market order, yes, the likes of Citadel and the other likes will be on that before you even know it. Another thing is to define your risk capping. Um, so obviously, you want to minimize your losses in your investment on that capital as well. So, how do we survive this? Because this is what it really boils down to. Um, this is again specifically for Bitcoin. If you're trading Bitcoin or just the general crypto market in a blinding way, you're at so many disadvantages because you'll read online, oh, that's going to go up. Here's the signals, blah, 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 blah. Bitcoin's going to move. 2 days later, a day later, coins back down. And there's a reason for that because these big firms are either controlling the price through, let's say, this council, or they have other techniques I've already mentioned that they can use to sort of control the price because they can do that via block trading or other means I've already listed. So, what are the common pitfalls? Well, we already talked about preserving your capital and maintain a steady progress. We have to be patient here, not panic because a lot of people get out when the market panics. And without a doubt, I hate to tell you people, and people may not like to hear it, you have to be a systematic trader. It's the only real way to be able to help minimize, take out the emotion and all that sort of stuff that a lot of retail traders that don't use automation with the automation having the rules built in instead of you, the human, overriding things when you shouldn't, because you let's say you panic or something. So I think we're coming up to our conclusion here. Yeah. So what we have to worry about is that the institutions do have market dominance in this space. They are using highly sophisticated risk management and positioning techniques. And we, the retail trader, need to be aware of things like this and be able to adapt, especially in Bitcoin. If my general advice with Bitcoin, build out a system to watch this stuff, let your automation kick in when it does see signals that the market confirmed to move up and then trade on that. And that's it. That's the only time I would trade something like a Bitcoin. Um, and that's not very often. And but if it happens, you get big moves. But on the other end, you get the big down moves as well. So it is that's why the volatility is so high. So generally, I'd say there's probably better places to trade. Gold's one of them. It's an easy trade right now. And as you know, we're done. Okay. Any questions so far at all? Thanks for going through that. What for half an hour? Anybody got any questions at all? If you're interested with what I'm doing, I maybe, and I'm pretty well. Let me first talk about this HBC in the recording. So as I said, we got this HBC test doing bond trading, quantum based, quantum enabled algorithmic trading with IBM. Um, I'll put up the URL again in the chat. There you go. So again, I might do a topic on this because I have some projects you can kind of experiment with and actually log into IBM and test out their quantum computing. So I may do that just as a out of interest. Um, and that's pretty well it. But as I said, for me, if you go into my website here with my analysis that I'm doing more as a human, I'm probably going to do these 7 day trials. My website will load up. There you go. And then if right here, I've got it kind of set up, but it's password protected right now under trials. So if you're interested in that, email me. Um, and I'm going to have, I don't know, a small number of people that will go through that for free. There's no credit card needed just to test the response to make sure that this thing is satisfactory to them and they could see themselves become a user. If that's the case, then yes, I'll still obviously keep the 7 day trial, but credit card required. And after a week, it goes pay like every other subscription model out there. That's about it. If you want to know more about what I'm doing, what I would probably recommend, go to the website quantlabs.com. You can click on the learn, get on my email list. Okay, I don't release people's info. Also, if you want to talk to me, you can do that too, doing blocks of 15 minute. It's pretty affordable. It's like a buck a minute. That's what it turns out to be. Okay, first question from Maru. Do you think behind the scenes they are examining from which wallet, what potential wallet would dump? Okay, that's a good question. I didn't mention what the AI did reveal with Bitcoin. They do watch through, I think it's Glassnode. What they look for is they're looking to see how many new wallets are created, because if they know that there's a price increase coming from Bitcoin, and there's all of a sudden all these new wallets being opened up, they watch for that. That's one of the breakout signals. Another way they can do that is as a rally happens, and people start emptying out their wallets as well. That's another signal. That would mean that it's a sell signal, or they're just dumping Bitcoin because they've made their profit and they want out, or they put too many losses and they want out, so they're emptying their wallet. So that's two signals you can use for the wallets on the blockchain. So that yeah, they can do that. There's all these other different techniques as well. But that's kind of one of the classic ones. And the other big one they watch for is the moves from a wallet, like one of the big wallets could hold hundreds of millions of dollars in them, and they move them onto an exchange. That might be another potential big move coming as well, or vice versa for a grade exit as well. So yeah, they do watch wallet movement as well. Yeah, for sure. Any other folks got questions? That's a good question, Maru. Good one there. I forgot to mention that. But yeah, they do watch wallets, mature wallets. Specifically, I think a wallet over was it 90 days or 60 days. As I said, they're looking for any new wallets being opened up on the blockchain as well. That's just some of the more high level things they do. That's what I saw as one of the signals they use. If I ask that more of that on the AI, I could probably get better answers. You just got to know what to prompt for as well. Anybody else got any questions as well? Just so you know, the video used to put up stuff in into my YouTube. I don't do that anymore. It's more valuable for me to put it behind a paywall. So if you want access to it, yeah, eventually get your free trial because then you'll get access to the playbacks. Same one with Tuesday on Gold and all the other ones that I've done recently. Anybody else got any questions? If not, I'll do a going once, three times. I have no coding background. How can I use this stuff? Okay. Daniel, that's a good question. Okay, so let me put it this way. In the world of my quant analytics, I can actually show you this. So I do have these groups. Okay, so this is behind the scenes on my quant analytics. So I post news. I post everything's all generated by AI. Okay, I just switched over last week. I said, screw it. I'm not going to watch things from a technical analysis, and nor am I going to watch things from a fundamental point of view. I am using quantitative technique. Okay. So if you were to read these, okay, over time and just understand how a trader, like inside trader or smart money trader does their trading, that alone in itself will help you be, put yourself way ahead of most traders. And if you get into that mindset of how traders work, smart money, just doing that alone, knowing what to look for on the data, you don't need coding. You can't do it as fast and do it while you're sleeping, kind of thing. Other stuff I put out is the news, but there's a couple of interesting things that I do. Um, so all my secretive sauce stuff I've put up here in this section. So even though you're not a coder, you can still get access to it. Okay, so that's very helpful for you there. I'm also looking at Quant Tower, as I said, which is pretty fancy pants stuff. And I'm starting to think maybe when I used to have MotoWave, wouldn't it be kind of interesting if you could develop uh, indicators or for people like you that don't have the technical background in terms of the programming, and then just provide certain custom indicators that may work that you get access to, and then you can just run that in your quant tower with, as I said earlier, AMP futures, which is one of the most popular trading platforms out there for futures trading. So that's another option I can give as time moves forward. So I may do that. Just depends upon what people want and the market demand. So it's just another option instead of having to learn it, code it yourself. That I can provide the indicators and strategies for Quantar if I stick with Quantar. So far, I like Quantar. So hopefully, I'll help you out there for the non-technical. When I say non-technical, I mean non-programmers. And anybody else got any questions at all? A couple of things I should mention about Quant Tower. I would say, yeah, maybe 5, 6 years ago, I was looking at MotoWave, which is Java based. MotoWave was very revolutionary at the time, still is. Um, and it's an excellent platform. The thing was, I knew over time some of these high frequency traders that I knew, insiders we'll call them, were telling me about this platform I've never heard of called Quant Tower. That was about 10 years ago. And I have purposely avoided Quant Tower until now because as I'm looking for a data provider or broker for futures and options, the top two in the US are Optimus and um, uh, AMP. And both both of them have their own platforms now, proprietary platforms, but they're all built on Quant Tower. So Quant Tower went out and made the white labeled their platform. So both AMP and Optimus are using that platform. So you got the two largest brokers out there using it for futures. So just so you know, that's how big Quant Tower is. Which exchange do you trust 100% to sell crypto? Uh, okay, so I will definitely give you 100% on Kraken. I've been with Kraken for years. Their support is amazing. You could be problem 2 in the morning, get on their chat, talk to somebody where English is their first language. They get what you're talking about. They will probably solve your problem. Best support I've ever had in any broker, any exchange. And they're honest too. And they just took over a few months ago Ninja Trader. They're coming out with an IPO soon. They're really out there in the crypto space. Um, Gemini, I can't say because I only hear problems with them, with the Winklevoss twins. The other one I would strongly probably avoid is Coinbase. When I say Coinbase, I got an email a few days ago saying from Coinbase saying, "Oh, you haven't logged into your account for a year." And I have about 100. US and about I don't know, you know, after all the holdings, I don't know, they've done, they could be more or less than 100 bucks, but let's just say $100. They threatened to take away and close my account. They would still enable me to transfer um, out of their wallets, but it's just Coinbase is a mess. I'd avoid Coinbase at all costs. They're just really dodgy. They're a dodgy exchange, but Kraken's a good one for US, which is pretty honest. There's a bunch of other newer ones I've not heard of, but I think Kraken's good enough. That's all you really need. As a Canadian, I was kicked out of many of my exchanges. Maru, I don't know what you did, but maybe you did something that they didn't like and you were high risk. So not sure what you did. I'm not saying you did, but it's unusual to get kicked out. Like I'm not active on Coinbase. They didn't kick me out of it, but they did close my account. So, um, but Kraken, no problem with at all. And so when you say get kicked out, does that mean you've been banned? But out of all of them, that I would trust Kraken for sure. Oh, Binance removed Canadians. Oh yes, yeah. Let me talk about Binance. Binance, it's hard to say. Years ago, when crypto was still hot and Bitcoin was going from their $17 to over 60,000 in that very short period of month, people were making money left over hand over foot. I had a virtual bot that I created, and I purposely put it at 17,000, and I had it, and I just pounded and pounded and pounded both Ethereum and Bitcoin in Binance futures, and it went from 17K to 1.2 million in 4 months, and it doubled again to about over 2 million in about 2 months after that. So it did pretty good, but it was virtual, and so I didn't make the money. But I learned a lot out of that. But so finance can be good in that sense. But now that they're heavily regulated, and there's so many countries that don't want to deal with finance, the reason they got booted out of Canada was because they got so big that they started selling tokens. Like you could buy a token of Tesla or Apple or whatever, that stock went on Binance because it was not regulated by the U.S. SEC or the Ontario Securities Commission. They didn't like that, so they booted him out because of that. Well, lo and behold, now look what's happening: is you got the Robin Hoods, all these exchanges now enabling you to do exactly what Binance got booted out for. You can buy a tokenized stock of whatever. It just blows my mind. But that's why Binance got kicked out. There was some dodginess stuff going on with Binance, but generally the core of the exchange seemed to be fine at the time. I can't say now, but they are regulated for a reason. Can you suggest any platform for demo trading? Uh, Stan, if you can let me know, do you refer to in what asset class, crypto or just general retail, like other asset classes? Crypto. Okay, yeah, definitely crypto. Sorry, Kraken. You can do some pretty interesting things with crypto on Kraken. And then there's another framework in Python called CCXT, where you can get access to 100 plus exchanges. Hello, Jimmy. Um, yeah, so you can use crypto. So if you're interested, uh, and I'm just going to put this out there, if you're interested in equity space like stocks, I think interactive brokers is still pretty good. They might be good for futures and options, but personally, from what I'm seeing as of last night, I think AMP is really good for the options and futures for simulated and demo account. And then, as I said, you get the free edition of Quant Tower as well for free. It's amazing. Yeah, crypto options. Jeez. Well, now you're talking derivatives where you want to go. Okay, that's where a lot of the smart money goes, and that's going to be owned. That derivatives now owned by Coinbase. So I don't know if Coinbase is going to keep derivatives separate from Coinbase, but it legally, Coinbase has bought them out. So derivatives your best one for that for demo as well. For the so most of the options outside of the CME on crypto will be put through on Deribit. Okay. The other one, the real deal one, is going to be the CME because you can now trade Bitcoin, Ethereum, XRP, and Solana. And I believe they have minis as well. They're small, some of them are the small ones, but you can't get a micro Ethereum and definitely a micro and a mini Bitcoin as well on the CME. So that, I would say that, and the same with the currencies as well, like the forex. I see no reason why you wouldn't want to be on a futures and options because if you're going through retail, it's not as regulated as with the exchanges, like the futures and options exchanges, specifically the CMEs. It's like heavily regulated. So there's nothing in terms of that exchange. It'd be very difficult to manipulate those trades. The only area they can kind of manipulate is through the dark pools and hide their block trades. And the other thing is, way as I said with the pay to play, that you can get those custom, we'll call them insightful data sets or data feeds that we, the retail, will never have access to because, well, we can't afford it. Any other questions? Thank you, Stan. Appreciate the thumbs up. Anybody else got any questions? What is the main best broker for XAU USD for salmon? For simplicity, like if you're just talking about gold, like XAU USD specifically, um, the one I probably think the safest is Oanda. I think that's one of their biggest asset classes is Oanda, and from a global volume in the forex world, Oanda is probably your best bet as well. No problem, Maru. I hope you got some stuff out of it. So Oanda is pretty good for that. Um, as I said, I'd only really push people to get into the futures and options. You can get into trades for a few $100, but it's the real deal. I mean, you could do like for retail forex and stocks and whatever, but I think a lot of that's going to come off outside of something like silver and gold. I just did a video on all that fun stuff 2 days ago, similar to this. No problem, Samuel. Thank you for the comment. Appreciate that. Anybody else get any questions? Guess we're coming up for an hour. That's cool. I don't mind going. I've done 6 hour webinars before. Anybody else got any questions at all? Hopefully you got something out of this. I think, as I said, what I've shown tonight when it comes to crypto, and namely well, let's just say crypto, because you can step outside of the regulated CME and go into Coinbase, go into Binance and Deribit outside the US where the regulation is not as well, there is no regulation really. So anything can be done on those exchanges. So be aware. That's why I'm not a fan of regulation, but when it comes to my live money, yeah, I do care about uh, my money to be safe in open markets. And yeah, you want it regulated. So that's what kind of why I like the CME as well. And nobody can manipulate that. I just don't see it unless there's a pay to play thing that the little people, don't have access to. Anybody else got any questions at all? Okay, so like I said, I'll do it once, twice. I'll give you the topics for next week. I might do two again next week. No problem, Mark. Uh, I might do two more next week. I'll be doing just a general HFT, I don't want to say secret programming stuff, but that's what the AI is revealing. I may go kind of hog wild on the AI budget and double it because I'm getting very deep in it. So I may do that. And as I said, there's now three big providers, Amazon's, the ByteDance, and whatever else is out there to try. There might be better AI models that we don't know about outside of the Claude and the Google, Gemini, and OpenAI. So we might find something better. Um, yes, Stan, that's right. You can look it up. Coinbase did acquire Deribit a few months ago. Let me just show you that. Yeah, here. Yeah, that people didn't know that. Buys Deribit. Yeah, in August, August 14th, right there. So that just happened. That's a big deal as well. But yeah, understand that Coinbase is becoming a what do you call it? A custodian for a lot of the ETF providers. That's kind of scary. In fact. So all your ETF writers, the Vanguards and whatnot, all the Bitcoin, the be held on Coinbase. Life is funny sometimes, especially they should be focusing on a good one like Crack, but not Coinbase. Yeah. So if you have any comments or questions, just let me know. That's what I'll do. I go in once, twice, three times, and we're done, I guess. I go in 1,000. I go in 1,000 and a half. I like to. Go in 2,000. Go in 2,000 and a half. Go in 3,000. I guess we're done. All right, folks. Thanks for joining. As I said, make sure if you can get on the email at as I said, QuantLabs.net, especially for those coming in from the meetup, and do join that and join my email list and enjoy my multiple onslaught of emails every day. But I put out a lot of hopefully valuable stuff for people. And if you don't like it, just opt out. That's fine too. But the other big thing I'm going to be pushing is this trial on the 7 day as well. So if you want, let me know and that you're interested in as well. That's about it. I guess we're done. Anybody else? They'll go in once, go in twice, go in three times. I guess we're done. Thank you for attending. And we'll talk to you later. And as I said, it's quantlabsnet.com. And keep your eyes out for the next one or two next week. Have a good day. Later. Bye. See ya.